Today's episode of the Watson Weekly Podcast is sponsored by Miracle, the catalyst of commerce. We all know that e-commerce is changing at breakneck speed, but if you're still playing by the rules of retail's past, you're leaving money on the table, and a lot of it. Miracle powers 450 retailers to successfully flip the script and transform their businesses by creating a flywheel of AI-powered marketplace and retail media solutions. What's stopping you from joining this retail revolution? It's March 3rd, 2025, and this is the Watson Weekly, your essential e-commerce digest. Today on our show, is Beyond.com doomed? Klaviyo reports 2024 earnings. Klaviyo coming from Salesforce Commerce Cloud. And PayPal Investor Day offers problematic vision. And finally, the Investor Minute, which contains 5 items this week from the world of venture capital, acquisitions, and IPOs. But first, in our shopping cart full of news, is Beyond.com doomed? Beyond will be profitable in quarter never of 2025. This place is effed. One fork incoming at Beyond. When a company says, and this is, by the way, what their CEO just said, that they were absolutely 100% behind the issues, it means they are absolutely 100% not behind the issues. Marcus Lemonis, who I think is a grifter, just my personal opinion, has no business in retail. These machinations between Beyond and Bed Bath and the zombie companies it's partnered with are too complex to even keep track of anymore. In Q4, revenue fell 21%. And the company, which by the way is a dropship model, just slashed its SKUs in half to 6 million while cutting vendors. The company lost $259 million last year. Someone wanted to mention to them that this is a death spiral for a marketplace. You're supposed to want to expand selection. This is not a new, super secret reverse Amazon flywheel framework that only Mr. Lemonis knows about. What's more, Beyond might have a few profitable months sometime this year, the CEO said. Again, for the record, similar to Flexport. What, Flexport? Like how I've slipped them in there just for no apparent reason, and their stupid Fortress balance sheet? When someone tells you they are definitely going to be profitable in the second half of the year, you might as well replace that word year with never. Many well-meaning analysts are making very nice-sounding noises humoring Mr. Lemonis. Why? I truly have no freaking idea. But oh wait, blockchain to the rescue. The company wants to create a blockchain for its customers to store its real estate assets. Huh? Hello? 2017 called and wants its grift back. A meme coin might be a better path to success. Someone, please put a silver bullet into the previously halfway venerable brand. At least it will keep the werewolves at bay. Wait a minute. Wolfcoin sounds like a fantastic revenue idea. No one tell Lemonis. Our second story. Klaviyo reports 2024 earnings. And they're expanding up, down, and sideways. Klaviyo has a 3-pronged growth strategy, and it's starting to play out very well, especially in an environment where there's not a lot of great competition for what they're doing, which is actually kind of surprising. Here are a few points on each. Overall, the company had full-year revenue up 34% to $937 million. Free cash flow is now at $150 million, and full-year revenue guidance is slightly down to 23 to 24% year over year. In terms of expanding up, they're going to market with Shopify and larger customers, in particular Reebok, Champion, and BarkBox. Full-year international revenue is growing 42% year over year, matching Shopify's growth patterns. The company has 2,850 customers, generating over $50,000 in ARR, up 46% year over year. The company is expanding down and now is the default marketing platform for WooCommerce. What? Well, why not do it is the answer. Who else are they going to pick? MailChimp? Asking for a friend. 15,000 shared customers today with WooCommerce, and WooCommerce has 4 million customers globally. This is a super smart deal, even if it is more down market. Why not scoop and score? The only potential downside risk is distraction, which is real. You are who you serve the most. The company is expanding sideways by growing within its customers and across their customer base. On that point, the company's average revenue per customer was up 15% year over year, indicating growth within accounts. If I had to target a few risks for Klaviyo, as people adopt SMS, their gross margins decrease. This is their highest upsell product. It's also not super clear that enterprise is interested in adopting them for SMS, and it does not seem like they will report it out as a separate line going forward. Is this because of attentive or some other reason? WooCommerce could also pull the company further down market, alienating the needs of their top customers. Shopify has mostly been able to avoid this problem, but it is a very tricky balance that not every company can find. On the upside, however, there is still a lot to like here. They could end up being a bigger business than Shopify if they play their cards right. Seems to this observer that they have more easily monetizable product expansion opportunities in other platforms, other verticals, and data. All areas which are somewhat out of the reach of Shopify itself, and the company is still founder-led. This is probably one of my stealth long-term companies to watch, to the extent that a $1 billion run rate ARR company like Klaviyo can be considered stealth at all. Our third story, Klaviyo coming for Salesforce Service Cloud. There's been a lot of chatter about Klaviyo introducing a direct-to-consumer CRM in its software and how that is going to disrupt. But a lot of attention has been played to Gorgias, another competitor. And look, Gorgias is going to do just fine. Klaviyo is actually attempting to be the Salesforce of the Shopify ecosystem. Just look at this quote. Quote, most CRMs are designed for B2B sales cycles, not the fast-moving, high-volume world of B2C. This is from the Klaviyo press release. Which software do you think they are mentioning here? Does anyone think Gorgias was designed for B2B? Me neither. Salesforce Service Cloud has billions in revenue as reported by Salesforce earnings calls. It's in the platform and other category. Gorgias, on the other hand, it's a startup. Let's look at a few key facts here. Large and enterprise brands are moving from Salesforce Commerce Cloud to Shopify, and Klaviyo has been dragging their feet on CRM, in fairness, to develop products a little closer to home. Salesforce Marketing and Service Cloud are clunky and extremely difficult to implement. It's like driving around a tank when you wish you had a sports car. Prices keep going up and service levels do not. At least Demandware was a good solution at one time. Exact Target? It wasn't even a great solution in its heyday. Which means there is a gap in the market. If you want to reduce your total cost of ownership, you are kind of locked into a Salesforce ecosystem because you can't leave it. You kind of still can't leave it because Klaviyo is really just getting started here. And yes, Klaviyo would also love to disrupt solutions like Aftership, Gorgias, Loop, and all the others, but that's not where their real money is. The crown jewel is in going after Salesforce and riding the coattails of Shopify right up market. And our last story. PayPal Investor Day offers problematic vision. The company seems to be offering declarations, hallucinations, and complications. PayPal CEO has declared two things. First, they're going to win checkout, and they're going to be the agentic AI company to create a full journey e-commerce experience. Sounds complicated to me. PayPal praised its legacy, but says it needs to evolve in these ways. On the buy side, helping buyers at the point of purchase understand how to spend their money. In terms of acquisition, helping merchants find their next customer. And in service, helping consumers in post-purchase. On the buy side, I expect they're talking about the assets related to their honey business. But more, they're talking about pooling resources for friends for specific tasks like going on a camping trip, which was the theme throughout the call, and then allowing brands to use that data in their purchase funnels. It's an interesting idea, and perhaps with AI, keywords are enough to give the retailer hints. But assuming the consumer enters this information, which is problematic, how many people will use PayPal pools? I didn't even know about this feature, and I track PayPal very closely. When's the last time I purposely opened the PayPal app? Not recently, unless forced. That is problematic. And I want PayPal to have data about my purchase behaviors and share those with retailers. Trust issues abound. PayPal also seems like it wants to build a marketplace using agentic AI based on PayPal profile data. At this point, I started to wonder what the CEO was smoking. Who the heck starts a shopping journey on PayPal? And if I'm using ChatGPT, what would be the conversion rate of users connecting their PayPal account to it? PayPal wants to create a commerce platform that connects LLMs or large language models, merchants, consumers, and PayPal payment instruments. What the heck this means, I have no idea. Personally, if I'm going shopping, I like Amazon. It seems to work, and I know I will get the item. Who is going to implement your super LLM payment buying API and make it the center of their experience? Nobody that I know. PayPal says this is their clear strategy, but actually, it's a vision. A strategy would actually help us understand how they would plan to pull this off. But in this department, not much was offered. On the acquisition side, I expect them to borrow pages from Klarna's playbook, but PayPal has a much wider reach. And it reminds me of Walmart following Amazon. I think this part of their acquisition strategy could work. On the service side, it's not clear what PayPal has in mind. I think that PayPal sees what Shopify did with Shop App, or what used to be Arrive, and so tracking is a challenge. PayPal wrapped their talk discussing how they're modernizing their development environment, mostly speaking about the things the company should have been doing 10 years ago. Braintree is now cloud native. Yippee! All this to say, they're going to build a lot of things. They're going to imagine a lot of things. All the while, what merchants really want is cheaper rates. I'm not sure they imagine an architecture where their payments provider is involved in all these areas. To me, kind of sounds like a big mess. And maybe that PayPal also has marketplace envy. It's that time, friends, for our Investor Minute. We have 5 items on the menu today. First, B2B Marketplace Auto Hauler Exchange raises $5 million Series A. Vehicle Transportation B2B Marketplace Auto Hauler Exchange has raised $5 million in Series A funding that will be used to hire talent, scale its operations, expand its team, and invest in its marketplace platform. This is a classic example of in the niches are the riches. Second, FedEx acquires route optimization platform RouteSmart Technologies. FedEx has acquired RouteSmart Technologies, a route optimization platform, for an undisclosed amount. The company will be a standalone entity under FedEx DataWorks, a direct subsidiary of Federal Express Corporation. This acquisition will enable FedEx to drive efficiency across its operations and widen the technology solutions it can offer customers. RouteSmart Technologies will continue to provide waste collection, postal and parcel, public works, and newspaper route optimization services. Newspaper? Third, Zeta raises $50 million at $2 billion valuation in new funding. Zeta, a banking technology platform and credit card processor, has raised $50 million in strategic funding at a $2 billion valuation from Optum, a healthcare company. The new funding will be used to finance growth. Zeta enables financial institutions to leave legacy systems and utilize cloud infrastructure to launch and manage credit cards, checking accounts, and loans. Why would a healthcare company invest in a fintech platform? And why does a company with a $2 billion valuation need only $50 million? Because it is far from profitability. That's what's usually the reason. Fourth, probiotic soda brand Olipop, valued at $1.85 billion and $50 million Series C funding round. Probiotic soda brand Olipop has raised $50 million in Series C funding at a valuation of $1.85 billion that will be used to expand product development, marketing, and distribution. The company reportedly recorded revenue of between $400 and $450 million last year. The better-for-you beverage sector is currently a battle between Olipop and competitor Poppi. The company claims to be profitable and maintaining triple-digit growth. And finally, Uvionics raises $3.5 million in seed funding. Warehouse autonomous robotics company Uvionics has raised $3.5 million, which will be used for product development and go-to-market expansion in the US and Europe. Warehouse inventory management is complex and allows autonomous drones to use technology to monitor and report inventory levels without this adding to warehouse staff tasks. Humans should be doing tasks that utilize decision-making and not repetitive tasks that can be automated. Did you know that RMW Commerce has another podcast? Check out the Watson Weekend for an unfiltered and lively e-commerce chat each week with me, Rick Watson, my co-host Jess Liseski, and an array of interesting guests and topics, all focused on e-commerce. You can find the Watson Weekend by searching for it on iTunes, Spotify, or YouTube. That's all for this week. Till next time, Watsonians. Hi, I'm Rick Watson, CEO and founder of RMW Commerce Consulting and host of the Watson Weekly Podcast, your essential e-commerce digest. Our production partner for the series is Podcast on the Fly. This podcast is produced by RMW Commerce.